Okay, just one more time, if my screen is visible. Thanks, Mansi. I forgot. Screen visible? Okay. Okay, all visible. Chalo, ठीक है. So this is inflation, chapter 5. Okay. So formally beginning the session. Okay. So let's focus here. Economic survey, chapter number 5. We had discussed chapter number 1, 2, 3, 4 in 4 successive days. Today is chapter number 5. Today's chapter is a little bit small, so we'll try to aim at finishing around 45 minutes. Okay, that's the ideal time that I am expecting this chapter to be finished. Okay. So here the most important thing is to understand how inflation is there, how inflation acted in the whole 2025-26 financial year, and what according to the economic survey, okay, how inflation is being treated by RBI and other policymakers. The most important thing in inflation, whenever we see elections are being debated on inflation, okay, you know that there was very high inflation in 2013, and that is why people were very much anti-incumbency was there. Anti-incumbency means incumbent government is the current government, and anti-incumbency means when people are not happy with the current government. Okay, so in 2013 the same thing happened with UPA, which is the alliance of Indian National Congress. Okay, so 2014 people elected NDA government led by BJP. Okay, so here we can say since 2013, if you see the inflation, so government was able to control the inflation in 2014 to 16 period. Okay, Raghuram Rajan was there. Dr. Raghuram Rajan was the RBI governor. He did a great job at this point of time, and he, with the help of repo rate, was able to control the inflation. Okay, so previous to this period, it was firefighting. Now we are moving towards credibility building. Okay, do you understand the meaning? The meaning is very simple. From firefighting means whenever there is a problem, we try to solve that. Credibility building means where there is a sustained inflation, predictable policies. So credibility of Indian economy builds in the mind of investors. ठीक है? So inflation tamed and anchored. Okay, voice breaking. Everyone facing the same issue? Just tell me if I'm audible properly. Voice breaking. Fine. Now tell. Now tell, all okay now? Just tell me if my voice is okay now. All okay now, all okay now. Just write quickly. Okay, ठीक है सबको fine. Okay. So before we start the chapter, we need to understand why the word tamed and anchored, that is important for this chapter. Now the big question in front of the policymaker is why inflation is no longer India's biggest fear. If you ask RBI, if you just see RBI, as I told you already, is the only central bank in the world which has developmental role as well. Okay, and RBI's major responsibility is to control inflation and promote growth. Okay, it means containing inflation is important without sacrificing growth is the most important thing for the Reserve Bank of India. These are the two objectives. Whenever inflation is too high, RBI sacrifice growth in order to control inflation, because in India, when the inflation is high, that's a first sign that the political party in power is in trouble. Okay, so here we can say the biggest fear is no longer related to inflation. Inflation is no longer India's biggest fear. It was then. Like if you see 2016, before 2016, it was there. Okay, so this chapter talks about reframing the inflation debate. Okay, how inflation can be controlled, what happened to the inflation, etc., etc. So inflation is not absent in the economy. Okay, it's not absent, but it's no longer unanchored. Okay, do you understand the meaning of unanchored? Anchored means where we control that. Okay, so leaving unanchored means, if you have seen anchor in the boat, okay, whenever they need to park, fishermen need to park their boat in the water. Okay, they drop the anchor. So with the help of that anchor, boat stabilizes throughout the night or non-operational hours. Okay, so on the same line, in India, inflation is not absent, but it is no longer unanchored. Okay, it means it has been seen quite cautiously. Now, if you see, global inflation has moderated sharply from post-pandemic highs. So post-pandemic inflation was very high. In this chapter, we will see India's experience. We'll compare it with global economies as well, advanced economies, even developing and emerging markets. Okay, so advanced economies stabilize around 2 to 3% of inflation. Emerging market inflation also eased. Okay, the reason is simple. Reason I'll tell you. The moderation is mainly due to softening food and energy prices. Both are important. Energy prices and food prices. So if both these commodity which are important, if you heard about headline inflation is about two things: food and fuel. So here he can say fuel and food. If both these prices soften, inflation softens. Okay. So surveys main claim is that India has moved from inflation firefighting to inflation management through credibility. Okay, how government is managing the inflation? With the help of monetary policy framework agreement signed in the year 2016, where government of India gave target for the inflation, which is 4% plus minus 2%. Okay, so it means maximum 6, minimum 2. That can be tolerable for the government. If it goes beyond 6, RBI will control. If it goes below 2, then RBI will intervene and control the prices again. Okay, so from inflation firefighting to inflation management through credibility. There is a sharp fall in headline inflation. Okay, while still maintaining strong GDP growth, showing macroeconomic resilience. Okay, so while still maintaining strong GDP growth and showing macroeconomic resilience. It means Indian macroeconomic indicators are robust. In the last 4 chapters, okay, 4 chapters we have completed. We have seen the word macroeconomic resilience. I have explained multiple times. Okay. So survey says that India has experienced three things. Okay. Here I'm telling India is experiencing three things, or India has experienced three things. First is repeated global shocks. Repeated global shocks, food price volatility, okay, and supply disruption. This is the India's experience. But still inflation expectation remain broadly stable. Okay. So repeated global shocks, food price volatility, and supply disruption. Domestic retail inflation, that is CPI, this is how we calculate, followed a clear downward trend. Okay, we've seen in the graph as well, and reaching very low levels in 2025-26, driven largely by a steep decline in food prices like vegetables, pulses, and spices. The consumption is high. Okay, held by good agricultural output and targeted government interventions. Though the core inflation appears sticky, much of it is due to surge in the precious metal prices. We have seen the prices of gold and silver crossed historically all the records in 2025. The reason is simple: global uncertainties. Outlook, what's the outlook here? Inflation is expected to remain within target. It is expected to remain within the target. Okay. Strong farm output, stable global commodity prices, okay, continued policy vigilance, but risk from currency movements, metal prices, and global uncertainty still remain. So we have decent farm output because this year we have, it means 2025, we have experienced La Nina, where every season is extreme winter, extreme summer, and extreme rainfall. Then stable global commodity prices. So commodity prices stabilize because of good farm output. Okay. Continued policy vigilance. It means government has all its eyes on prices, supply chain, and everything. But this is the risk. When we talk about global inflation developments, it's called broad-based disinflation. Disinflation, everyone understands? Difference between deflation and disinflation. Yes, no, quickly tell me in the chat box. If no, I'll give you the best possible example. You will never forget. Difference between deflation and disinflation. You are saying then no. Yes. Okay. Suppose you are driving a car at 80 kilometers per hour. If you're not driving, imagine sitting. Now, from 80 kilometer per hour, you go to 40 kilometer per hour. That is this disinflation. But when you do the reverse gear, when you put the reverse gear, it is deflation. Okay. So disinflation means reducing the rate of increment in inflation. Okay. But deflation means negative prices. Okay. Clear, everyone? Just write clear in the chat box. So global headline inflation fell sharply from 8.7% to 4.2%. Okay. Sorry for my throat. Inflation is now 2 to 3% in advanced economies. It means US economy, European economies. 5.3 in emerging market and developing economies. Okay. India recorded 2.8%, while China experienced near zero inflation and deflation. So almost zero. Stagnancy in prices. If you see country-wise trade, US inflation eased to 2.7%. Risk remain from tariffs and monetary easing. Okay, so that's why tariffs are there. So monetary easing, they are compensating. Euro area, you can say 2.1 due to softer food and energy prices both. UK inflation rose to 3.4 due to sticky service inflation. Japan shift from deflation to wage-driven inflation. Okay, so they have increased the wages to drive inflation in the economy, supported by yen weakness. Okay. Now, monetary policy response with inflation easing, major central banks, they are cutting the policy rates by 75 to 100 basis point. 75 to 100 basis point means 0.75 to 1%. Okay, RBI cut the rates by 125 basis point. Bank of Japan was an exception, raising the rates amid rising inflation. Because bank in Japan, they are struggling to get the deposits. That is why raising the interest rate can attract deposit in the banks. Okay. Commodity price movements. Oil prices fell more than 20% in 2025. So negative energy inflation. Why oil prices fell? Because when they put sanctions on Russia, Russia started selling discounted oil in order to get customers. Simple. Global food prices softened, turned negative later in the year. Reason good monsoon and produce everywhere. Metals, iron ore weak, aluminium moderate, and copper surged due to AI and data center demand. Okay, so you need copper wires and all, so that used in using that. Lower commodity prices reduce global production, transport cost. Okay, so this is how everything improved. Emerging market and developing economies. Brazil, rising inflation before moderation. High inflation, weak growth, sanctions were there. So inflation cooled due to cheaper imports. Okay, Southeast Asia. So when imports are cheaper, obviously inflation will also be cheaper. Deflation from weak demand and excess capacity. So China is struggling with, like on Sunday, we were discussing about this. China changing its economic model. Okay. So deflation from weak demand, because in China the real estate sector is struggling, and they are focusing on domestic consumption more than export, just to cure this problem. Excess capacity, it means they have huge amount of capacity, but they are not getting fulfilled. Okay. So India stands out sharp disinflation alongside strong growth. That is why you must have read in the newspaper that India is in Goldilocks zone. Goldilocks zone. Remember the first thing I told you in the lecture, that RBI has two objectives: to control inflation and grow the growth, push the growth. Goldilocks zone means when inflation is down and growth is high. Okay. So that indicating a well-managed growth inflation balance in India. That is why you see everywhere India is in a perfect control. Graph you can see below. China, you see struggling. Other emerging market countries, world, advanced economy. India is very much in balance, the orange line. Beautifully depicted in this graph. And that too stable, you can see the fluctuations are there. Like post-COVID, you see every graph was rising. So India was stable. When everyone came down, India coming down gradually. Okay, so gradual scenario are always good. Monetary policy response of global central bank. As global inflation eased from post-pandemic highs, many central banks shifted focus from aggressive tightening to supporting growth. Okay, the same thing happened in India as well, and RBI also did the same. Advanced economies such as US, UK, Euro area implemented cuts of 75 to 100 basis point during this year. Now, these cuts were possible due to why? Because headline inflation moderate. Moderate means not very low, not very high, midway. Falling commodity prices falling everywhere, especially food and energy. And reduced supply side pressure because smooth supply side helped taming down the inflation. Okay. Reserve Bank of India 125 basis points since February 2025. Bank of Japan remained an outliner, raising the interest rate by 50 basis points. After exiting long negative interest rate regime. Negative interest rate regime, you understand? In Japan, it used to follow negative interest rate. It means when you deposit money in the bank will charge you on that deposit. In India, we get interest rate. Okay. They get penalty because they want people to spend so that economy can grow. Okay. Rising wage driven inflation, so wages got high. Currency depreciation, so higher import cost again lead to inflation. So for Japanese model, it was important. Okay. Now overall trend, global monetary stance moved from tight to cautious accommodative and except in Japan. So overall trend is cautious but accommodative. Accommodative means they are ready to adjust if there is a scope of growth. Okay. Now, drivers of global inflation, number one, food prices, second is oil prices. We have seen multiple amount of time. So, global inflation moderated because of these two things. You can see here global food and oil inflation trends. So, food is blue, OPEC basket is orange. So, you can see the fluctuations. Okay. The Gargi is asking a question. These decline and rise in basis points are intentionally. Yes, are intentionally not. This is like the effect of the inflation. So prices are declining everywhere. If they do not reduce the interest rate, how will they support the growth? Okay. Like in India, capital is not the problem. Cost of capital is a problem. So in order to manage the cost of capital, okay, they had to reduce it. Got it? It's like simple. It's a cause and effect. Cause and effect. Okay. Just give me a second. Another reason, metal prices. Aluminium, iron ore showed subdued or negative inflation. Copper prices rising due to AI and data center, so supply constraints. Overall, softer metal prices. Supply chain normalization, so pandemic era disruption eased, so stabilizing the production cost and all. Country specific factor, China deflation due to weak domestic demand and excess capacity. Okay, it means so many houses, but nobody is buying. You can see in India is also happening. Can you see nearby areas when there are so many houses? Okay, you must have read about in social media some kind of a meme that our generation, it means even including mine, they will not fight for property. Have you heard about that? कि रिश्तेदारी में उनकी जमीन और जायदाद को लेके लड़ाई नहीं होगी. You must have heard about it. Because उनके पास प्रॉपर्टी ही नहीं होगी. ठीक है. So property prices in India are going like, है ना? I'm not clear why people aren't demanding houses. Yes. The reason is the bubble. The reason is bubble, Aditi. If I tell you a tier 2 cities like Jaipur, okay, cities like Indore, cities like Ahmedabad, है ना? You will find a normal 2 BHK flat which is around 1 CR. 3 BHK flat 1.5 CR. 1 CR, the EMI will come for 30 years loan, which is somewhere around 70,000. 70,000 the EMI for 30 years of loan. है ना? So these are the things. That's the problem. The same thing happened in China. Lot of houses, nobody was demanding. The reason is nobody was able to buy. Okay, and if the wage rate or wages goes up in China, the China will lose the competitive advantage of low cost manufacturing. Okay, then US and Europe, disinflation led by falling energy and good prices. Okay, Japan, wage growth and currency weakness pushed inflation higher. Okay, rents are growing rapidly, yes, because of the demand. People want to live in the economic centers. People want to live in the economic centers. So that's why rent is high. People are paying. I know a lot of people in Mumbai, they are paying rent of 80,000, 90,000 as a residential apartment, 2 BHK. So rent in Mumbai. Now, Mumbai की तो खैर बात अलग है. You cannot compare Mumbai with any other city. Okay. है ना? I study real estate very, very closely. Okay, before investing, you can consult me. Consultation charges will be separate, not included in the course. ठीक है? Yes. Domestic inflation. Here is the most important thing. If you see domestic inflation, to explain today's success, the survey first revisited the past. Okay. So clear downward trend in retail inflation. CPI based retail inflation steadily declined for 4 consecutive years. So you can see 6.7, 5.4, 4.6 and 1.7. Very important data to note down in your data sheet, copy, notes, wherever. All 4 years inflation data, very important for the exam purpose. And you have to remember these figures: 6.7, 5.4, 4.6, 1.7. Okay. This is the lowest in current CPI series. Never been this much. WPI inflation remained lower than CPI, reinforced disinflation trend by easing producers' price pressure. So WPI was in negative in some months as well. I remember in the month of November. Sharp disinflation during financial year 26. So inflation fell rapidly during October 24 to, you can say, October 25, a record low. So average inflation in H1 FY26, H1 FY26 means April to September 2025, okay, was just 2.2%. Fall mainly driven by food prices, not broad demand compression. Okay, that is why in India, this is stabilized because of supply chain corrections, not because of demand compression. Okay. Now, food prices led the decline, turned negative from mid 2025. Major sustained deep deflation, vegetables. So proper supply did not contribute to the increase in the prices. Okay. Then pulses price eased after earlier supply shortage. Now government takes quick action. Okay. Now government takes quick action. Whenever something happen, they stop first of all exports. Okay. So the buffer stocks and everything will be available for the domestic market. So in a week or so, we can stabilize prices of any vegetable, any pulses. Okay, spices, long deflationary phase. So again, you can say the spices already not growing the prices. Cereals inflation fell from 6% to near zero. So government actions like buffer stock release, import-export policy adjustment like putting ban on export. As I told you, release of buffer stock to the domestic market. Mandi monitoring so that no artificial supply shortage can be created. Okay. No artificial supply shortage can be created. Makes sense, everyone? Core inflation appears sticky. Sticky means not moving very high. So 4.6% by December 25. This is largely due to surge of gold and silver prices, not because of any other prices. Okay. So when precious metal is excluded, core inflation actually declines, showing underlying price pressure that are softening. So except for gold and silver, if you remove from core inflation, it actually goes down. Okay. Base effect played a major role. Much of the drop in inflation is explained by favorable statistical base from high prices last year. So in 7 to 9 months, the base effect pulled the inflation downwards. Okay. Base year, by choosing the base year, data changes. Okay. I hope everyone is aware about this. Okay. Like for example, if I give you, if suppose this is the base year, in comparison to this, you can see inflation is declining. But when I take, suppose for example, base year, which is financial year 18, let's say, then the data will show a different picture. In COVID era data, we cannot take, as the definition of the base year is that year should be normal. COVID-19 era was not normal. Okay. Now, how supportive agriculture conditions happened? Good monsoon, higher crop output, increased sowing, improved food supply. So that was near record production of cereal, pulses, oilseeds. So here you can see core inflation, blue line, very much stabilized. Food inflation, you see it declining. Headline inflation is also declining. Okay. So graph will give you the picture. Drivers of food disinflation. Okay, let's understand this. Drivers of food disinflation. Food inflation show a sharp and sustained decline, entering deflationary territory from June 2025. Good monsoon, great crop. Okay, so that's why fall in CPI inflation. Here top crops are important, like garlic saw price decline. This top is like tomato, onion and potato, very important. Every year government takes care of these three prices. Okay, so improved supplies, active government market intervention. Okay, market intervention is important. I remember पहले क्या होता था, ठीक है? I'll give you one example. So I remember 2013 when McDonald's stopped serving onion. Hotels started charging onion salad 100 rupees per plate, and that is in 2013. Can you imagine? Onion salad today, 100 rupees is also not very cheap or affordable. Okay. So 2013, I remember what happened. When onion prices went through the roof, highest possible prices, government did not stop the exports. Until the time they stopped the export, that was too late. Everyone realized that if you grow onion, you will get huge amount of margin. So farmer started producing onion. People selling in the export market, they stopped and they turned towards domestic market to make more profit than export. So here you see another thing. Lot of mandis warehouse created artificial shortage. So if onion price is 200 rupees kg today, tomorrow it will be 220. So they were not selling, they were just keeping it. Artificial supply shortage. This all led to 2014. Prices crashed. Prices crashed to the floor to get into like almost 2 rupees per kg. Can you imagine? Everyone lost it. Farmers lost it. Lot of things were there. And if you remember 2013, that was the time maximum farmer suicide cases we were listening in the newspaper. आपको नहीं याद होगा? Obviously, you must be very small. But that's the thing. But right now, if government is doing this I have seen from my eyes. Daily in the newspaper, farmer suicide was there. That was so painful. So by buffer release on time, retail sales, rail transport, export ban, etc. help stabilizing the prices. And when the prices are stabilized, people say Indian economy is a dead economy. ठीक है. Easing pulses inflation. Yes, I'll read comment. Okay, Vishaka. So the estimate will be revised soon based on the new base year. So we should not those rather than no, you can use this. There's no issue with that. Those data will come later after your exam. Remember, I used to go to market with my father. They were selling old stock for high price. Yes. चलो आपको याद है, अच्छी बात है. Okay, so inflation moderated because domestic production recovered, imports were managed, buffer stock improved. Continued deflation, this is this. Spice prices remained in deflation for about 18 months. Though decline was moderate, it was added to the total food disinflation. Okay. This is again cooling cereal inflation, stable protein food prices, and edible price management. Both were there. Okay. If you see pre-inflation targeting in India before 2016, India was facing double-digit CPI inflation. Double-digit. Food and fuel shocks transmitted fully. What will happen in that global market? Transfer to the consumer. Weak monetary credibility. Monetary policy going in this direction, fiscal going in that direction. Household expected price to keep on rising. Huge amount of pressure of rising prices. So 2009 to 13, you ask your parents, everything became unaffordable. We saw inflation more than 10%. You ask your parents, that was the one of the toughest time. Monetary policy lacked clear nominal anchor. And at that time, RBI governor was the only person who was deciding the repo rate. So when the expectations are unanchored, even small shocks can cause inflation, and even runaway inflation. Runaway inflation means inflation which cannot be controlled. And favorable agriculture condition. Okay, favorable agriculture condition. Supply side improvements created benign food inflation environment. That's the achievement of the policy makers. Okay. So right now MPC takes the decision. So it's more democratic, not dependent on one person alone. Okay. Transparency is there. MPC communicate properly in press conferences, releases. So there is always accountability for RBI as well. Numerical target for RBI. Like all of you are having numerical target for the examination. These many marks you need to like score in order to get the selection. So inflation targeting is not just suppressing the prices. Okay, listen very carefully. Inflation targeting works not just by suppressing the price. It's very easy to suppress the price, but by anchoring the expectation, showing the path, adjusting it. So even during inflation spikes, household did not expect that inflation will be permanent. So it means a sign of anchored expectation. Okay, like if RBI is not doing anything, the rupee is out of control, but rupee is in control. Although it is 90s, but still, it's not out of control. Okay, we have seen COVID-19 supply disruption, global commodity prices spikes during like 2020 to 2022 period. Russia-Ukraine war started in 2022. Pressure on wheat prices, climate-driven food shocks, and the loss of crops during like rains in non-season. So despite CPI inflation is moderated, core inflation softened, inflation expectation remained contained. Okay, got it. So survey shows that it shows institutional credibility, not luck. It's not luck. It's the hard work of RBI. Okay. Many advanced economies are experiencing persistent inflation post-COVID. India controlled. So India controlled both fiscal deficit and inflation. और क्या चाहिए? So India inflation normalized, fastest. Being a developing country, institutions are not that strong in comparison to developed country, but still we were able to do that. Okay. So food inflation generally a villain, but yes, it also stabilizes. Core inflation also stabilizes. Headline inflation also stabilizes because headline inflation is noisy. It makes headline in the newspaper. That's why the name suggests headline inflation. Okay. Now here if you see agriculture activity, so cereal production, you can say almost 3,000 lakh ton, rice, wheat, coarse, all boosted food availability. Okay, positive Kharif outlook. First advances shows. Okay, so again it's beyond or it's with the target. Improvement in pulses as well. So output rose to this much. Oil seeds also, we were import dependent, but now domestic production is also there. Strong Rabi sowing process as well. Rabi is the winter crop. Okay, sown up area is this. Okay, supported better reservoir levels because of good monsoon, soil moisture, etc. So we are expecting that we will get good crop in Rabi as well. Okay, so you can say pulses, oil seeds, food grains, all growing. Now, what are the drivers of core inflation? Okay. Core inflation mainly shaped by four major components. These components are important for your exam. Okay. Which together form over 60% of core basket and about 1/3 of upper CPI. Okay. So you can say clothing and footwear. Sharp disinflation. Okay. Now you understand what's the meaning of disinflation. Okay. Easing input cost, improved supply condition, a strong competition in the goods market. So we've seen decline in the prices. Prices in this category adjust quickly, so inflation falls faster when cost pressure eases. It means if input cost goes down and in the market there is competition, so you will always be try to pull the prices down in order to gain the advantage. Simple sense. Second is housing. Inflation declined during 2023 to early 24, became stable. Rent revisions are infrequent, often annual. Based on negotiated contracts, so if contracts are negotiated at 5% hike every year, then obviously the contracts will remain same. Okay, not daily market pricing. Stabilizing component is core inflation. So demand is weak, but prices not rising. Health. Gradual easing trend from earlier elevated levels, like for example, service delivery cost, administrative charges, institutional practice. What happened? Because post-COVID, the increase in the supply of hospitals, you must have seen in your nearby areas. A lot of hospitals being built post-COVID. Plus, in the COVID, there was dependency on the hospital. So post-COVID, dependency also reduced. So dependency reduced on hospital and supply of hospitals increased. है So this adjusts slowly, contributing to low volatility in the core inflation. Moderation visible since mid 2025. Now hospitals are writing we have 300 plus bed hospital. Now why they are highlighting 300 plus bed? Because during COVID-19 it was difficult to get a bed. If you remember. COVID तो सभी को याद होगा. You all must be there in your graduation, post-graduation. I think nobody can forget COVID. Then transportation and communication. So generally low average inflation, but shows episodic spikes like fare revision, fuel-linked services, telecom pricing changes. Since mid 2025, disinflationary trend observed here as well. Okay, like for example, the flight prices are almost similar. I remember in 2021 during COVID, the flight prices were very, very less. But the revision did not happen even in 2026. The same 5K flight for major destination. If you open Indigo app, you'll see this. Okay, so transport, communication, etc. So major component you see here, housing, transport, communication, clothing, footwear, health. So see everyone in every sector, I mean, the prices or the market is stabilizing. Now GDP deflators, manufacturing reversal in terms of trade. Okay. So GDP deflator measures economy-wide price changes, nominal to real, you know, everyone. And prices of deflation. Sector-specific deflators can be derived using current GVA divided current constant price of GVA. So this is implicit price indices for each sector. Terms of trade, ratio of manufacturing deflator to agricultural deflator. Manufacturing prices move relatively to the farm prices. Ratio is greater than 1. So manufacturing enjoys better prices gains. Here less than 1 gains more. So unfavorable for manufacturing. Okay, this is called terms of trade. So key trend is simple. Agricultural prices rise faster. Manufacturing reversal in terms of trade. Okay. Reason agriculture benefits from MSP based price support. So agriculture got the government support. Services have higher pricing power. Okay. Manufacturing faces global competition, cost pressure, and thinner margins. So here you can say this backed by government, this is backed by the nature, and this is again backed by the market, not able to expand that. Okay. So every sector is clear cut visible here. Okay. Is it clear? Now, impact on manufacturing share. So manufacturing share in current GVA fell from 17 to 18% to 14%. Share in constant prices output share stayed broadly stable. So how much we are trying to increase our manufacturing sector contribution, still we are not able to grow that. Because services sector is growing faster. It does not mean that manufacturing sector is not growing, but manufacturing share in the pie is not growing. Okay, you understand pie? Okay, so if you can see, Not exactly. You see this. So if this is services, this is manufacturing, and this is, we can say, agriculture. 70 to 18% is agriculture, 14% somewhere, 60 to 65 is services. Approximate, I'm just giving you figures to visualize. Okay. So broader economic implication of this is better agriculture, terms of trade may pull labor and land back to farming, which we are seeing that India is struggling. Everyone is selling farmland to make housing. Okay. Lower manufacturing prices squeeze margins and may discourage investment. Okay, like for example, putting a manufacturing plant for plastic spoons. You know, plastic spoons, there's total ban on plastic in some states. Okay, now people are shifting towards wooden spoons. You know, when you order something from Zomato, wooden spoons come. So manufacturing prices squeezes the margin depending on the competition, depending on the terms of trade, etc. Okay, so farm to fork supply chains can reduce intermediation cost and improve overall efficiency. So firms have maintained profit through cost efficiency and technology adoption, not by increasing the margins. Rural versus urban inflation. So here see, rural inflation was higher than urban inflation. The reason is very simple. In rural areas, when people get money, they spend. In urban areas, this is not the case. Food prices shocks widened the rural-urban gap. So food inflation was dominant driver overall in this year. So rural areas being more food dependent experience a stronger price pressure. Gap narrowed and reversed in 2025. So food inflation is sharply here. So inflation declined both in urban and rural areas. So rural inflation fell below urban inflation once food prices softened. So in rural areas, access to food is more in comparison to urban areas. Like you cannot compare the vegetable prices in rural and urban areas. No comparison. Rural inflation more volatile. Okay. Greater fluctuations across time and the states. So both we have seen. Okay. Core inflation trend is smoother. So when food and fuel excluded, rural and urban core inflation move in similar and stable pattern. Rural core inflation remains slightly higher, but difference is small and steady, indicates similar demand and pricing behavior across non-food items. So non-food items, almost similarity in rural and urban areas. Transportation cost also plays a very important role in urban area. Okay. So this you can see the data. On the above, we have core inflation. Okay, here you see core inflation. Core inflation means removing the fluctuating items, majorly food and fuel. Here you see headline inflation. Okay. So core inflation is higher in rural areas, which we can say is sticky. And here you can say that it is fluctuating on top and below, depending on the time and the regions. So this is it. So you always see urban is leading in everything. Okay. It's like when it's going down, rural followed, going up, rural followed, and rural stuck into that. Okay. Is it not unethical to appreciate higher urban inflation when both are India? It's not about ethics, it's about the supply chain. Things takes time. When you go to remote villages in India, you will not realize that you are living in 21st century. I remember, I'll tell you, I went to Andaman in 2018, Andaman Nicobar Islands. It was very difficult to send a WhatsApp message. Then Modi ji went in 2019 and laid the foundation of optical fiber cable from Chennai below the sea, like on the sea surface, sea floor, I mean, not sea surface. Then again, I went into 2021. You know what happened? 4G, 5G internet with a full speed. You cannot compare that. It's ocean, island. Island is difficult to give because there's a lot of water. So signal disperse in comparison to land area. This is the item. So in 2018, if you see, it doesn't feel 21st century. But 2021, just because of internet, whole island changed. Okay. So that's not unethical. It's called development. Even same in 2019 when I went to Leh, there was nothing in Leh. People were protesting Amazon should not come in 2019. They were stopping Amazon. In 2022, again I went to Leh. People were selling on Amazon those artifacts, Ladakhi traditional clothes, shawl, etc. They were selling in 2022. So that's a difference in development in 2-3 years. This I've seen from my eyes. Okay, so outlook for inflation here we'll see. Inflation to rise gradually but remain within the target. So RBI MF expect headline inflation to move up unusually low levels. So obviously that's important. That's what we all are expecting. And that's why repo rate is also stabilized. Okay. Okay, I missed Aditi. Sir, if food has a higher weight in rural CPI, the price of food fallen recently, why is still rural inflation is higher in compared to, because the rural area the components are less because of the consumption of limited items. Like when you live in urban areas, you have so many things to do. But when you go to a remote place, what will you do after 6 p.m.? People are like, काम हो गया, अंधेरा हो गया, what will I do? So you have less things to accommodate. So the basket is narrow. Okay. I hope I'm able to give the understanding about it. Yes. FY26 inflation revised down to somewhere around this due to strong Kharif output and robust Rabi sowing. So all you will see in the next economic survey. IMF said this much, rising to this much in the next financial year. RBI projected this much inflation in early FY27 quarters. Okay. So these are the best time to take loans. If you are willing to take loans, home loan, car loan, anything, take it. You'll not find these low inflation rate and the policy rates. Okay, food inflation outlook remains favorable. So why? Because of monsoon, adequate reservoirs, strong crop output, stable food supplies. It means buffer stocks and all. Higher fertilizer availability, keep agriculture input cost contained. Okay. GST rate rationalization, so reduce cost pressure. External risk, currency depreciation could raise imported inflation, but then I expected to soften because especially crude oil, limiting pressure. Base metal like copper may see price increase because of technology mainly. Precious metal like gold and silver remain elevated because global uncertainties are there. So nobody is trusting dollar. When nobody is trusting dollar, countries are not trading in dollar. Okay. And even those who love to invest in dollar, now they are pulling money out of dollar and uh, going to safe havens like hedging their investment gold and silver. Bottom line is inflation is FY27 is expected to be higher than FY26. Not at all levels to threaten the macroeconomic stability, but it will remain in the range of 4%. Okay. So it appears manageable. And policy vigilance is always there. Like government is always vigilant about these. Okay. So when you see this, the whole chapter talks about a lot of things. Food, demand, global economy, and crude oil prices. It's all demand driven. Okay. So I hope you enjoyed the lecture, got the insight. Okay. I will give this. So if you find low energy today, apologies for that, because really it's a low energy.